Hey everyone, welcome back to Corporate Decoder, where we decode the hidden language of corporate filings and reveal the real story behind the numbers. Today we're diving into a crucial report from Biotechnology, a company that's been making waves in the biotech world. Get ready, because this filing is all about a significant cash infusion, and when it comes to biotech, more cash usually means more science, but also more risk. Before we dive in, if you love getting clear, no-nonsense insights from these complex documents, make sure you're subscribed to the channel, and for even more exclusive content and to connect with other finance enthusiasts, join our Discord community linked right down below in the description. Alright, let's talk about what we've got here. This is a Form 8K filing, which is basically a company's way of telling the public about important events as they happen. Think of it as breaking news for investors. For Biotechnology, the big news dropped on August 6th, 2025, and it revolves around a new deal that's bringing in a significant chunk of change. So what's the deal? Biotechnology has signed an underwriting agreement. Essentially, they're selling a bunch of their company stock to raise money. And who's helping them sell all these shares? None other than big names in finance: Morgan Stanley, Goldman Sachs, and Bova Securities. These guys are the underwriters acting as the middleman between Sana and the investing public. They're selling over 20 million shares of their common stock, and get this, each share has a par value of just 1/10,000 of a dollar. That's tiny, but the price they're selling it at tells the real story. They're offering it to the public at $3.35 per share. Now, that might not sound like a massive amount per share, but when you multiply it by millions of shares, it adds up quickly. On top of the stock sale, they're also offering what are called pre-funded warrants. Think of these as a special kind of option to buy stock later, but at a super low price, almost free, designed to get around some regulatory rules. They're selling almost 1.5 million of these. The idea is that these warrants allow investors to get in on the ground floor and buy more stock later if things go well. Now, for the number everyone cares about, the money. After all the fees and expenses are paid, Biotechnology expects to bring in about $70 million from this offering. $70 million, that's a serious amount of capital for a biotech company. This cash is crucial because developing new drugs and therapies is incredibly expensive, involving years of research, clinical trials, and navigating complex regulations. This whole deal is set to wrap up very soon on August 8th, 2025. That's just a couple of days after this report was filed. This quick turnaround suggests everything is already in place and investors are eager to get their hands on these shares. The agreement itself is full of the usual stuff you'd expect in a deal like this. It has the company making promises about its business, the terms and conditions for the deal to be finalized, and how they'll cover each other if something goes wrong, especially related to the US securities laws. These promises are important because they give investors confidence that the company is being upfront and that the deal is on solid ground. They're mostly for the benefit of the people involved in the deal, though, and what they mean can be limited by what the parties agree to. This whole offering is happening under a registration statement on Form S3. This form is usually used by companies that have already registered their securities with the SEC and are now looking to issue more. It means Biotechnology is already a publicly traded company and is following all the required reporting procedures. Let's look a bit closer at those pre-funded warrants. The exercise price is incredibly low, just 1/10,000th of a dollar per share. This is a strategic move. It means investors who buy these warrants can lock in the right to buy stock at this nominal price, paying the rest of the actual purchase price for the stock when they exercise the warrant. There's a cap on how many shares someone can buy using these warrants, typically limited to 4.99% of the company's outstanding shares. This is a common feature to prevent any single investor from acquiring too large a stake too quickly, and it can be adjusted up to almost 20% with proper notice. This is a way for the company to manage who owns its stock and prevent hostile takeovers. And here's something interesting: if a fundamental transaction happens, think of something major like a merger or acquisition where the company is bought out. The warrant holders are entitled to receive whatever they would have gotten if they had exercised their warrants just before that big event. This ensures they aren't disadvantaged by and welcome back to the Chanist by such a major corporate change. The details of these warrants are laid out in separate documents which are filed as exhibits to this report. Moving on to other events, the company also released a press release about the pricing of this offering. This is how they officially announced the details that are in this filing to the wider public and media. Now, this section is super important. And you see it in almost every corporate filing. It's the forward-looking statements disclaimer. Everything in this report that talks about future expectations, plans, or prospects is subject to change. They're telling you that the $70 million they expect or the August 8th closing date are just estimates. Real-world events, market conditions, and unexpected problems could make these actual results different. It's a standard legal protection, but it's a reminder that the future is never certain, especially in a volatile sector like biotech. They are not obligated to update these statements if things change, so always do your own research. Finally, this section just lists all the attached documents, the exhibits that support the information in the filing. These are the actual legal agreements, the company's legal counsel's opinions, and that press release we just mentioned. They are like the source documents for the story we're reading. This index is like a table of contents for all the supporting documents, making it easy to find the specific agreements and opinions that back up everything Sana Biotechnology is reporting. And lastly, the signature. This is Bernard J. Cassidy, Executive Vice President and General Counsel, signing off on behalf of Sana Biotechnology, confirming the accuracy of this report as of August 7th, 2025. So what does this all mean for Sana Biotechnology? They're bringing in $70 million, which is a massive boost. This money is almost certainly earmarked for their research and development. In biotech, funding is lifeblood. It fuels the discovery of new therapies, the costly clinical trials, and the regulatory hurdles. This capital injection significantly de-risks their ongoing operations and allows them to push forward with their pipeline. It signals confidence from investors who believe in the company's science and its potential to bring groundbreaking treatments to market. However, it's not all smooth sailing. Selling more stock, even with warrants, dilutes ownership for existing shareholders. This means each existing share now represents a smaller piece of the company. While the company gets much needed cash, the ownership pie gets sliced thinner. The lower exercise price of the warrants is a smart way to incentivize investors and secure capital. But it also means that when those warrants are exercised, even more shares will be issued, further increasing dilution. The success of this funding round hinges on Sana Biotechnology's ability to translate this capital into meaningful scientific progress. The market is tough, and even well-funded biotech companies can falter if their research doesn't pan out, or if they face unexpected setbacks in clinical trials. The forward-looking statements disclaimer is a key reminder that while the funding is secured, the future success of the company's therapies is still very much uncertain. They need to use this money wisely to advance their drug candidates through the development pipeline, aiming for the ultimate goal of commercialization. In conclusion, Sana Biotechnology has successfully secured significant funding, positioning itself for continued growth and research. Investors clearly have faith in their vision. The key challenge now is execution. Can they leverage this $70 million effectively to bring their innovative therapies to fruition? The biotech landscape is unforgiving, but this financial shot in the arm provides them with a critical runway. What's your take on this funding round for Sana Biotechnology? Do you think this solidifies their position, or are you more cautious about the dilution? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more in-depth corporate analyses. And don't forget to join our growing community on Discord, linked in the description. Thanks for watching, and I'll see you in the next one.